All right, ladies and gentlemen, I hope you had a wonderful day. After many exciting Mondays and craziness to start the week, we finally had an uneventful Monday, but this time we actually closed red. I know this may not seem like a lot to you, but the last 19 watch lists for Monday, well, we have closed green since the second week of July, and that streak finally ended today. So we've seen a lot of streaks come and go recently, it feels like, but now tomorrow is the CPI, 1 hour before the bell. That's when the data comes out, and what people are expecting, it's going to be a wild one. I actually have a very important update. You are going to want to hear this. You are going to hear me talk about this early in the morning, but there is a reason why the CPI might come in higher tomorrow. So if it doesn't, the market's going to love it. We have a bunch of things to talk about, but before I go any further, if you are not familiar, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. But tomorrow, since the data is so important, we will be live 15 minutes before the CPI. So around 8:15 a.m. Eastern, 6:15 or 5:15. Oh, man, my time. Oh, man, that's early. Yeah, we are going to be live, and we are going to have all the data, even recap it all. But I do have a gem that you're going to want after this. But anyways, Chad, we have a lot to talk about. I'm getting all excited. I have the plays. I have the keys. A little bit of a baby recap, but not much happened. And the big focus is tomorrow with an option for the next day depending on how tomorrow plays out. So drop that thumbs up on the video. Make sure you're subscribed. Hopefully we see you there in the morning. But run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, we are starting with this CPI data. The number for headline tomorrow, it is expected to come in around 3.3%. The core number is expected to be a nice flat 4. Now, where do things get good? Where do things get bad? The good part, you don't have to pay attention to the month over month, as opposed to some of the other times we've seen the CPI come in, the velocity and the rate of change, you had a lot of people focusing on it. Now, granted, if it does rocket back up, everybody will pay attention to this, but for the most part, the real big focus is on the core number and the headline number and what they are showing on a year-over-year basis. Now, here's the thing. Is tomorrow going to be tricky? Yes and no. I think the reaction is going to be tricky, and some of the changes we are going to be experiencing, that will be tricky, but it's a pretty clear-cut report as far as CPI is concerned. We have definitely had a lot to deal with. The one thing you need to keep in mind is that there is an ongoing bullish assumption that Powell is done raising rates. That's why you had this market rally over the last few weeks. This is why people have been crazy. I talked about this on stream today. It's very simple. Right now, you go look at these CPI numbers and see where they're at. The headline number is expected tomorrow to come in just above 3%. That is a low number. The current rate, the Fed funds rate, is at 5.2 to 5.5. That means you are higher than the inflation rate. Even if you go to the core rate, even if it comes in higher than the 4% expected tomorrow, the current interest rate is higher than inflation. That's a good thing. That means it is restrictive for the economy, assuming that it stays there. That's why tomorrow, if the rates are supposed to be staying the same now, and everybody is under that impression from Powell over the last couple of weeks, he is done, this data and how it moves up and down, it holds a little bit more importance now, because if this number goes up, let's say hypothetically, it's not going to happen tomorrow, but if it did go up above 5%, well, you went from restrictive policy to now accommodative because inflation would be higher than the rates. Now, that is people's worry, but like I'm saying, in the meantime, as these changes in inflation come in, that is either going to make the policy either more restrictive, the same restrictiveness we've seen as of late, or less restrictive if these numbers come in higher. So That's what we're watching out for. It's going to be very simple. A low number, the market's going to love it. A high number, the market is not going to like it at all. If it comes in line, get ready. You're going to watch the special teams come out because people might start punting for the data tomorrow. So now, what you need to watch tomorrow as far as the factors, I wish I had a breakdown. However, you could just go to the BLS website like I showed you in a video just a couple of weeks ago, and you could go through the breakdown of items, and this is where the meat of the bone happens tomorrow, because there's a couple of things that will make CPI come down tomorrow. There's gas prices, which have declined a lot over the last couple of weeks, especially since you were just at $95, and we'll talk about how some of that has moved. But gas prices, that could bring the CPI numbers down tomorrow. Automobile prices, the price of used cars wholesale, that has came down. Even the recent Manheim Index, that has dropped, and even on the quarter, it's been one of the biggest drops in auto prices. It's not like the auto market has been hot, and now you could kind of say the same thing for real estate. However, real estate metrics have not came down, but things have been slowing. Even the Fed has talked about they're finally seeing interest rates start to affect real estate. There was an uptick on that super core, that core housing, that Powell. I don't know if they have it on here. I don't think they do. They have a different name for it, but Powell is looking at all of those different exclusions. And again, I'm not going through this. I'm giving you the simple one. I hope you go through all of these, but real estate hasn't been that aggressive, and these are all the reasons why CPI could go down. And now there is also the baseline effect. So you may have heard this at another point. Well, we keep seeing it in the play, and now this time around, we can't forget how bad last October, November really was, and the number you're going up against for the year-over-year number, it's a 7.7 on headline, and I believe a 6.3 on core. So as far as this number coming in lower, even if there are factors that make inflation come up higher, you are going against a very high number. Remember, it is year-over-year, so we're looking for how much higher than that 6.3 of last year. So if you're going against a higher number, that means it will be easier to have a lower number, assuming all goes right. Now, those are all the good things for the CPI tomorrow, but now what can make the CPI go up and give us a bad reaction where inflation comes in higher? Number one is delays. We don't really know the timing. Yes, there's a reported time, but like I've gone over, last time we went over the BLS website, you could go through and read about their revisions, and you'll see all the asterisks and everything else. The data recording period, there is often a lot of delays. Why could that make inflation go up? Because oil has made a lot of moves. You even had this consumer expectations last Friday, and those shot up out of nowhere, even though gasoline prices went down. So depending on that delay as far as oil and gas is concerned, that can end up having a negative effect on the CPI tomorrow. However, that's not the most important thing. This is that thing I was telling you in the video. This is that gem that you need to understand for tomorrow. We did bring up healthcare today on the stream, but it goes a lot deeper than that. There is a change to the healthcare costs tomorrow on the CPI. So this is expected to have a lot of big changes, and you could see people are expecting the first jump and big jump on the health insurance aspect of the CPI in a very long time. I don't know if you see this chart. Take a look at this chart. The reason why they're making a change tomorrow is because it has been very hard to determine the cost of healthcare, especially health insurance. Everybody pays different costs, deductibles, different diagnoses and diseases and treatments. It's a huge rabbit hole. And think about it, just like real estate and the owner's equivalent, and they try to figure out the prices of kind of very obscure things that are also very necessary, but a lot of Americans have a lot of variable costs when you compare every single person, so it's naturally hard to measure this. So they decided to make a change that is coming into effect tomorrow, because how they previously recorded it or calculated health insurance for the CPI, they looked at the cost of the insurer. So since it was so hard to determine how much everybody pays and then throw this into the CPI to say this is what inflation is doing, they would go off of the insurer and how much it costs them to provide the service. That's why take a look at this chart that I have up here. That's exactly what you see. You're watching how much it cost health insurance companies to give health insurance versus actually how much it was affecting Americans in terms of CPI. So yeah, that change is going to be happening tomorrow, but hopefully you see the problem now because this is a non-core, this is related to core. It's not autos, it's not gasoline, it's not food, it's health insurance, and now some people are expecting this to go up. It's priced in now to have the first jump, and there's even some outliers like TD Securities. They expect it to come in above 1.8%. So depending on how high this number comes in tomorrow, this is going to make everything pretty sticky, and even if headline comes down a lot, you are still going to have to deal with this. Now, granted, if this doesn't shoot up tomorrow, everything should go down, and if we don't have to deal with a huge increase in healthcare and nothing else rockets up, there's no delays, most people are expecting inflation to come back down. If you go to the forecast, you see the charts from last time, everybody is expecting a drop because there are some easy factors that we are going up against. So now that we have all of that said and done, what am I expecting for tomorrow? Unfortunately, I do not think we are going to get an easy read. Not only is there going to be the follow-up jobs report and then an additional CPI and jobs report in the following weeks before we get Powell, I do think we are going to get a nice little phenomena of headline dropping and core either going up or staying sticky. I think we're going to see some problems in there more or less. But one thing I will say, and I think this could be a very good factor for tomorrow, is that if we are expected to come in at like 3.1 to 3.3, there's a chance we get a below 3 print. If you see anything that shows a 2 handle tomorrow for headline, I really think that's going to get people excited. But then, depending on that whole healthcare thing and what happens with core, there could be some problems here because people want to see core finally show a 3 handle as well. But if 4 proves to be sticky, that's not really the best sign. So we'll see what happens tomorrow. But I will tell you this, even though tomorrow is important and we've been waiting to get a lot of info from this, and this could decide a lot, especially coming into the holiday next week and the end of November and the seasonality and all of that, there is still the possibility of a punt tomorrow. And what I mean by that, if the data isn't clear and we get one up, one down, and the market's not able to decide too much and certain things don't move, the bonds, well, unfortunately, everyone's going to say, okay, let's wait till now the PPI and retail sales, which holds important, and that's the next day, and then you might get a little bit of a move or have one reaction today, and then you might get a full-blown reversal or follow-up based on the data that we get tomorrow. So I'll tell you right now, the answer is the bonds. We've talked about this the last couple of days. The market has hit a new high every day, no matter what. Even if we close red, we still have just like set a new high on the week, month, even the year, and depending on how you want to break it down. Okay, not the year because we were just at 460, but what I want you to see is that the bonds, long end, even the 10-year, they are not moving at all. They are right above where we had Jerome Powell and then like right where you closed on the non-farms, and they've been stable all coming into tomorrow. So watch out for that. And like we talked about yesterday, Wall Street is saying that 4.4% on the 10-year, that is the magic number. If we stay below there, if yields get below that, they're saying the market can hold above 4,400 easily and vice versa. If the yields do not go below 4.4 and stay above 4.4, then the market will probably stay below 4,400 on the SPX. So we'll see how it all plays out. Tomorrow is the main event, but we will not be disappointed because there's still a lot more. But now, let us get into the plays. So, right off the bat, I got a couple of different plays for you. There is going to be some interesting things tomorrow, but you saw it already with the data, man. I think bonds, the micro ESs, the big ES, wait for the data, depending on if it is an easy read tomorrow. And I think tomorrow will be difficult for equities, maybe a little easier on the bonds. But if you start getting some of these big candles, these have been some of the best plays all day just because you'll get a bigger move in 5, 10, 30 minutes, then you'll get waiting like 7 hours. So that's always going to be a play, and that will be something that I'm looking out for tomorrow. But as far as play number 1, I got to go with Target, and honestly, I am conflicted because I don't know if I want to play this again. I played it last quarter. We came out a winner on it. It was like $4,000. Then we made money on the Disney. That's another like 2 or 3. That's where I came up with that $7,000 when I was talking about it earlier today. But TGT, They pay a dividend right before their earnings. They're down like 40%, I think, even since the last earnings or something ridiculous like that. And even if you go look at them on the year, they've just been getting destroyed. The problem, they're at those like 2020 levels. They still have a lot of potential downside, and then they also have died enough where they might be able to recover. Now, I said this, sometimes there's companies that are like, oh, they've had 10 bad earnings in a row. Well, I'm just telling you, man, they don't always have to have a good one. I mean, this is how PayPal got here. You know, PayPal was one of those companies for like a really long time. Like the earnings just never got good. You see what I'm saying? They got to that 2020 mark, you know what I'm saying? And like just eventually the earnings did not get good. So might have a lot of support or resistance here depending on how you want to look at it. But I'd watch out for Target. I don't know if I'm going to play it. It offers you a little bit of the dividend right before. If you want to play the earnings and buy the shares prior, you could get some of the run up, but we do have their earnings tomorrow. Or no, that's Home Depot. You got Target on Wednesday morning. So there's a little bit of time, but I would keep an eye out for it. I just don't know if I'm going to go for the play or not because the risk to reward. So I'll look at it on stream. Ask me about it. We'll even maybe look if we could do some combination of plays. Somebody's brought up butterflies and spreads. Maybe we buy shares, get some protection on the downside. But there's a lot of ways, or maybe you don't play it at all. But going to be watching Target. That is play number 1. Then play number 2. I'm going to start with one play that I already have, and it kind of links into another play here that I'm going to get on number 3. But travel. I have UAL still. I'm still down from the earnings, but now I'm only down like 4 or 5%, which is a little less than the earnings expected move when it reported. Why do I have a 10-year chart up here? But the whole idea here is that travel earnings, a lot have been good. Some have been a little weak, or they've warned about the future slowing down here. But the interesting part, there's been some big upgrades and downgrades, but they have all kind of been rallying, and a lot of them have been absolutely wrecked as of late. So if we do notice trends coming into the holiday season, if the data does come in good, I would definitely watch out for any of the travel names. Again, you even got that Boeing air show. You saw those rumors and how they took off today. I would definitely watch out for anything in the space from like commercial side, but all the way down to the retail side as well. I think it's going to be very important, and that even now leads into play number 3, Uber. So shout out to the long-term, baby, but why I'm bringing this up, this thing is breaking out. Their earnings were good, but you got to start pulling this out. Remember, they IPO'd not too long ago, 2019. It's like they've been around for longer. You've known them for a very, very long time, but they're getting out to their first breakout point. This is what happened last time at these prices. They went crazy towards the end of 2020 leading into 2021. So they're above 52 to like 53. If they start getting above here, next level is like 55 to 56. But this is a stock. You see a couple like even Meta and Nvidia, but they're holding up their yearly gains, and now this is starting to go vertical. Like I'm saying, with the whole travel thing and everything with inflation, if things do get good, this one, I already have it for the long term, so I'm chill on it, but watch if it does start to get crazy again. If it starts hitting prices that haven't been seen, Uber is in its own little league, especially with how many people have invested it over the years. It would be very interesting to see this one start to break out, so watch out for that. Other than that, play the data, watch the bonds. It'll give you the answer, and then all you got to do is take the data and take it home to the end of the year. But Chad, that is your watch list, ladies and gentlemen. Make sure Hydra Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, baby, you want to see increase? You want to make some moves? It's always going to get messy. That's what the oxen do. Oh, yeah, I don't know, baby. And all labor will bring in some work, baby. So what you going to bring with it? But talk is worse than poverty. Oh, my goodness. So work. Put it to work, baby. Grind, baby. I love you, Chad. Drink that water. Stay hydrated. Stay healthy. Read it. 30 days. You can do 2 a day now. But Chad, I'm excited. CPI. I'm awkward. If I had the camera, it'd be awkward. I don't know. You want the camera? I still haven't charged it. You know that? I just haven't charged it since that one day. I got lazy with it, man. That's why it's nice, though. You can see I'm dancing right now. See, it's a lot less pressure. All right, hard.